Okay, hi everyone. Good evening. Thank you for joining this masterclass session on financial planning and reporting. My name is Chimezie. I work as a programs officer here at the Tony Elumelu Foundation. With me on the call is Omowumi Adenuga Taiwo, who works as the head of operations at our PAS. We also have Foko Rollins who will help us in translation for our French audience. Over to you, Omowumi. Thank you.
Okay, thank you very much, Minzie, and good afternoon, everyone. So this session is a continuation of the first session, which we started 2 weeks ago on developing financial projections for the business. And this is particularly for the BeGreen cohort of the Tunmelu Foundation. So what we will be doing in today's session is spending more time on these topics and the sections we started off in the previous session, and also taking time out to address some of the questions that came out from the first section. And hopefully through answering the questions, we'll be able to get a more robust understanding of how to develop financial projections for our business based on the conversations we started with the last time. So what I'm going to do in this session is get started with a walkthrough of the financial model template. This is a slide that shows the different sections that you would have to populate in the financial Excel templates. These sections are the sections we already started walking through and talking about in the last session, which are in the Microsoft Excel worksheets that we all received. One important thing to note is that when you get your financial model templates, the Excel templates, I noted a good number of people were dropping the comments that they were not able to see the drop down where they could select their business country. If you're encountering that issue, it's because your workbook is still in protected mode. So you have to download
Okay, bonjour tout le monde, je suis Roland Foucault, votre facilitateur francophone. Donc, pour aujourd'hui, nous allons donner une suite à la session sur le remplissage de la planification financière dans le fichier Excel de la Fondation. Exercice que nous avons déjà fait il y a de cela 2 semaines. Donc, aujourd'hui, on va revenir dessus particulièrement en répondant à un certain nombre de questions et en faisant un tour de table des différents points qu'il y a dans votre fichier Excel. Donc, on va repasser la parole à Omoyomi pour qu'elle puisse continuer la présentation. Merci. Over to you, Omoyomi.
Thank you very much, Boko. So the other thing is, if you're still encountering issues with seeing the business country in the Excel documents that when you open it, make sure to download it properly and then move it out of protected mode. When Excel is in protected mode, you don't see all the features, but ensure to download it properly. If you notice it's giving you that problem, close the documents, download the file properly to your workstation, your desktop, or your laptop, and then reopen it again and ensure to click enable editing. So With that in mind, I will now focus on this section, and I want to spend some time just talking through the assumptions section of the financial model template. When you open your financial model template, you will notice that the workbook has 5 different tabs. There is the introduction tab that you see immediately you open it up, instructions tab, and you just need to add your name, your company name, and your email address. Let me flip over to the Excel sheet so that you can all see what I am speaking through. So you would notice that this workbook has a total of 7 sheets. There's an instructions tab where all you need to do here is just to enter your name, your company name, your email address, and then click this button so you go to the assumptions tab. The next tab you see is this tab, and this is where you do most of the entries. You make most of the entries. There is also the income statement tab, the balance sheet tab, the cash flow tab, a summary tab, and then a glossary tab that just shows the definitions of some of the terms that you would see in the course of filling the assumptions tab. 2 things you must note: out of the 7 tabs in this workbook, you only need to fill instruction and assumptions. You don't need to fill the income, balance sheet, cash flow, or summary. These sheets are automatically populated based on the information you put in the assumptions tab. So all you need to do is fill the assumptions tab. And then the assumptions tab, based on what I was just sharing now, has 10 different sections. And I just want to spend some time talking through the 10 different sections. So the first section is the general section. In the general section, if you have your Excel worksheet open, you can look at that. In the general section, all you need to fill is your business country. By the time you select your business country, you automatically select business currency for your country. So 3 things you just need to fill in the general section: your business country, then the names of your business products and services, and your macro indices for your country, which is the tax rate, the company tax rate applicable in your country, the interest rate, and the inflation rate. Interest rates will apply for to compute loans when you want to take out loans. So in the general section, you're only filling 3 things: your business country, which then populates your business currency, your business products and services, and you are allowed to fill up to 3 different products or services, and then your indices, your country indices, which is the tax rate applicable in your company, in your country, for companies, for corporations, the interest rate, and the inflation rate. So I'll pause here now so that Foko can do the translations.
Ok, thank you, Omuyumi. Donc, comme on vous l'a dit, aujourd'hui, nous allons plus répondre à un certain nombre de questions que vous avez eu à poser. Donc, on remarque déjà qu'il y a certains qui n'arrivent pas à remplir le fichier Excel. Certainement, peut-être parce que Excel s'ouvre en mode protégé. Donc, ce qu'on vous recommande, c'est d'avoir une bonne version d'Excel ou bien de cocher l'onglet, le bouton qui demande d'enlever la protection sur Excel. Parce que quand c'est protégé, il y a des options que vous n'allez pas voir dans votre fichier Excel. Donc, vous ne pouvez pas remplir le fichier Excel. Donc, une fois cela fait, nous allons vous rappeler que le fichier Excel qu'on vous donne a 7 parties. La première partie, c'est à 7 onglets. Le premier onglet, c'est les instructions. Ensuite, les hypothèses ou les données, le bilan, le compte de pertes et profits, le cash flow, c'est-à-dire le tableau de trésorerie, un onglet pour le résumé et enfin un onglet de glossaire, donc où on vous a expliqué un certain nombre de terminologies qui sont utilisées. Maintenant, rappelez-vous que l'onglet à remplir, c'est uniquement les instructions où vous mettez votre nom, le nom de votre entreprise et surtout l'onglet des hypothèses. C'est là où tout se remplit. Et le premier volet de cet onglet, c'est le volet général. Et dans le volet général, vous avez la possibilité de remplir votre pays, votre monnaie qui se remplit automatiquement, de choisir 3 produits, de choisir 3 produits, d'indiquer quel est le taux des impôts qu'on applique dans votre pays, le taux d'intérêt bancaire, le taux d'inflation, le taux des amortissements en fonction des constructions, de matériel, des véhicules, des installations et tout ça. Donc, voilà ce que vous devez remplir dans le premier volet qui est le volet général. Donc, on va continuer avec les autres aspects. On va toujours au mieux.
Thank you, Foko. So after you fill the first section, which is the general section, you can then move to the second section, which is growth rates. And in this section, what you'll be required to do is to enter the applicable growth rates for your business below. And then you use the growth rates to demonstrate the project expansion plans for your business. So you know, section has 2 main subsections, revenue and cost. Under revenue, for each of the products types that you've listed here, so you notice that whatever product you list here in the general section, as you said, product 1 and product 2, this name will show up here. And then for each of your products, you just need to put in your projected sales volume and your projected price, volume growth rates and price growth rates for each of the years, and you're projecting up for up to 3 to 5 years. So this has already been filled in, and then you do the same for all the products and services you have listed. For cost, you also project your cost growth rate, the growth anticipating in cost. What growth rate means is that essentially you are trying to plan out ahead and estimating that in year 1 as a business, if I need to buy, let's say, I recycle plastic, and then I have to buy plastic bags, black bags that I use to pack all the plastics I'm picking up. I'm going to need to buy those bin bags or plastic bags to store the plastic. I'm going to buy them at maybe 50 naira in year 1. But in year 2, due to the inflation in my country, it might not be 50 naira in year 1. It might be 80 naira, or it might be 100 naira. So this growth rate area is where you project that growth in cost. So for instance, if you know that the cost is going to grow from like 50 naira in year 1 to 80 naira in year 2, you would then project a growth rate of 30%, because the growth rate is computed as the difference between the first year's price and the second year price divided by the first year's price. And if the second year price is 80 naira, first year's price is 50 naira, is 80 minus 50, 30. 30 divided by 50 is 3/5, which is 60%. So you put in 60%, and in year 3, let's say it grows from 80 naira to 100 naira. You then put in the growth rate of 100 minus 80 divided by 80, which is 25%. So I will do that instance here just in case, just as an example. And then you do it all on and on for each of the years up until year 5. I think you only need to project up until year 5, even though this template shows projections for 10 years, but you only need to project for 5 years. And then you're going to project how your different costs in your business will increase year on year for your first 5 years. You do that for your direct cost, for your salary costs, rent, utilities, marketing, administrative, and then you project the growth rates for each one of them. For some of the costs, the most realistic growth rate is your inflation. So let's say inflation in your country is 6%. You would simply, inflation would impact most of the applicable business costs. So you can just put 6% for all of them so that you are able to progress beyond this section. So that's it on growth rates. Next section is your startup costs. And in this section, you can see from the description, enter the cost you expect to incur in the process of setting up your business below. Note that not all costs may be relevant to your business, so only few where necessary. In this C, startup costs, is very important. Only fill the costs that are relevant for you. You see land, building, furniture, equipment, vehicles, installations. This template kind of assumes the model of someone that is setting up a factory and they need to build a factory for their business and they need to buy the land, build a factory, buy equipment and things like that. So, but if if your business is not of that nature and you don't need to incur this kind of cost, you don't need to buy land. Maybe you already have a land, you don't need to buy it. You can choose to leave this section blank, just delete whatever is in there. But for all the other costs that you will need to start things up, you put in here for your fixed assets. And then after you fill this section for your fixed assets that you need to start up, you then come over to the next section and then you compute your additional startup costs. Because in addition to building a factory and setting up a factory and buying equipment for a factory, you're also going to need to have starting inventory or the raw materials that you need to start the factory to get the factory started. So that is your opening inventory. That's allocation for purchase of initial stock. Your initial working capital, and working capital is the payment you need to make. Like if you open a factory to recycle, you will need to pay for electricity so that you can run your machines. You might need to pay for gas. You might need to pay for water. So all those different costs that you need to pay that are separate from the cost of setting up the fixed asset of furniture, land, equipment, vehicles, those ones fall into the category of working capital. Any payments, allocation for payments, vendors and employees in the first few, as based on this model in your first few months. So you allocate it and you can allocate it based on how much worth of many months worth of direct costs you will need or operating costs you will need. So if you need, before you start running your factory, you need to have money to be able to run it for 3 months uninterrupted. And you need that money to be available before you start it. You indicate you need 3 months worth of direct costs, you need 3 months worth of operating costs, or you change it to whichever applies for you. How much worth of costs that you need to be able to run. Because for some of you, based on the nature of your business, you need to run the factory operations and generate output from the factory, or I'm using factory as a general word. You need to generate output for significant outputs before you can start to sell and bring in money to fuel your business, to finance your business. So you put in that buffer or leadway, that runway that you need here. You select what is applicable for you here. So before we move to the fourth section, which is headcount analysis, I will pause here for translations.
Oh là là. Okay, can I go on, please?
Yes, please, Poco.
Yes, please, Poco.
Ok, oui, donc, après la première session qui était la session générale, nous allons donc maintenant passer à la session sur les taux de croissance. Donc, il est question pour vous de growth rate, ok, thank you. Il est question pour vous de remplir les différents taux de croissance des différentes rubriques que vous avez dans votre activité. Donc, ça peut être les ventes, le prix de vente, le volume des ventes pour chaque produit, les revenus, les coûts variables, les salaires, le loyer, tout ce qui est maintenance et utilitaire, les frais de marketing et publicité, les frais administratifs, les frais d'assurance, maintenance, transport et les locations de licences. Il est question pour vous de remplir tous ces taux parce que ça va influencer plus tard en bas dans les montants initiaux que vous allez mettre dans votre programme. Donc, n'oubliez pas que ces taux-là doivent se remplir année par année. Dans le cas qu'elle a pris, là, par exemple, le taux de 6%, qui est le taux, qui peut être le taux d'inflation de votre pays. C'est les informations que vous avez dans l'information économique. Si vous ne les avez pas, il faut vous renseigner, on va vous les donner. Le taux d'inflation qui permet de savoir quelle est la croissance des prix et des valeurs qu'on va avoir d'année en année. Next, please. Pour ce qui est de la prochaine section, qui est la section des coûts de démarrage, il est question pour vous d'indiquer quels sont les différents coûts avec lesquels vous allez démarrer votre entreprise. Donc, ça peut être en CAPEX, ça veut dire le terrain, les constructions et le génie civil, tout ce qui est installation, les équipements et les machines, les véhicules, tout ce qui est utilitaire, Internet, eau, électricité. Donc, vous devez, ici, par exemple, on a mis en construction 230 000, en fourniture 113 000, en équipement et machinerie 4 200 000, en véhicule, elle a mis 3 210 000. Vous voyez que ces montants-là sortent sur les bases. Et on précise aussi que ne mettez que les montants que vous allez utiliser dans la réalité, donc n'inventez rien. Si une rubrique n'intervient pas dans votre activité, veuillez simplement ne pas la remplir. Laissez-la vide. Donc, pour clôturer cette partie, vous devez aussi indiquer quels sont vos différents délais. Le délai de la durée de stockage, le stock d'ouverture, là c'est opening inventory, le stock d'ouverture, vous devez indiquer le stock d'ouverture, vous devez indiquer le fonds de roulement. Donc, quel est le montant dont vous avez besoin pour faire tourner l'entreprise? Et ici, c'est automatique dans la mesure où vous devez juste remplir le délai des encours de production, le délai que les stocks mettent dans votre entreprise. Et ça, c'est sur des listes de choix. Là où il y a 82 000, par exemple, vous devez cocher. Actuellement, c'est 3 mois. Là où il y a 3 890 059, vous devez aussi cocher et choisir le nombre de mois qui correspond à votre activité. Donc, voilà ce qu'on pouvait expliquer concernant cette partie. Over to you.
Thank you, Foko. So I will now move to section 4, which is headcount analysis. And in this section, you enter the salary and number of employees you expect for each key business function. Note that not all headcount groups may be relevant to your own business, only few as applicable. So in this section, I have the opportunity to project the number of employees you need to hire based on the different departments or functions or units in your business. So in this template, you can project the number of senior management, CFO, number of business development or sales staff, number of customer sales or customer support, number of marketing staff, number of IT or tech support, back office staff, and operation staff, front desk, records, fleet management, and the like. Note that you do not need to fill every section here. So based on the type of business you're running, you might not need to hire people into business development or people into marketing or people into sales. So only fill what applies to your business. This first section is where you project the benefits that you want to offer to your employees as a percentage of salary. And then benefits tend to be in the range of between 5% to 30% of total salary package. And I can put 20% here so that we move it on. So in this example, I will not go through each of them because we've done this section before. So I assume that the business we're running, we don't need all these other staff categories, but we will need operation staff, actual people to man our fleet, take care of the facility. We will need 2 operations managers, 1 operation associate. We will need just 2 in year 1, 2 managers in year 1. But by the time we get to year 2, we will need 5 managers, and then I put 5 managers here. And then I just made an assumption that we need just 1 associate for the first 5 years of running the business. And then I've also projected that the base annual salary for the manager is 2 million naira. Base annual salary for the associate is 1.2 million. And these sections, these gray sections, dark gray sections, you don't have to fill them because once you enter the number, like I'm going to change this number from 1.2 million to 500,000, and you would see that the number changes automatically. This number is already calculating based on the information that you provided as the growth rate, salary growth rate. So you do not need to fill it. All you need to fill are the baseline numbers and your growth numbers. So you will notice the difference, two different colored cells in the Excel sheet. And I'm pointing to a section here at the top. Look at the top right of your Excel sheet, and then you see instructions. So the ones that are light gray, you can put data in them. The ones that are dark gray, you don't need to put the data in them because the data is computed. So all you need to fill are these light gray sections. These light gray sections. You don't need to fill the dark gray sections. The dark gray sections are automatically computed based on what you fill for the light gray sections. So that's the head count. You just put in the your estimate of the number of employees you need to hire in your first year up until your 5th year. As you know, most of the time you would increase the number of staff you have as your business and your revenue is increasing. So this template allows you the opportunity to start with the number of employees you can pay salaries to in year 1. And then as your revenue increases, you can then afford to hire more, and your customer base increases, you can then afford to hire more employees. So that's the headcount analysis. Then section 5 is operating costs. And in this section, you then fill the data for your business. And your operating costs are split into direct costs and fixed costs. Under direct costs, your raw material, your direct labor, factory overheads, and inbound support, you fill in all the sections here, the baseline here. All you need to do is put in how much will you need for your direct labor costs in your first year? How much will you need for your raw material costs in your first year? All you need to do is to fill in the first year costs. And let me do an example and fill in the first year costs. And every other year will be computed based on the growth rates that you provided here in section B. All those growth rates will be computed here. So all you need to do is just the baseline cost, then fill the baseline cost. And I'm filling in the numbers, and you can notice that as I fill the numbers, it populates the year 1 to year 5 projections. It's likewise for the fixed costs. You don't need to put in salaries and wages because it's picking this number from the total from the previous section, headcount analysis here. But you fill the amount you need to pay for rent, for utilities, marketing and advertisement, administrative, maintenance, insurance, transport, and subscription costs. Note that not all costs might apply to your business. So if you know your business does not require this cost, you can afford to leave this place blank. Just leave the place blank with the cost item that it does not apply to your business blank. The next section is section 6, revenue. And we have indicated you would see a revenue section. This revenue is split into 3 sections to account for the 3 different types of products or services that you listed here. So you see recycled plastic, plastic waste collection from corporates, and those. So over here, you see this section here is for the product 1, which is recycled plastic. This section here is for product 2, plastic waste. And then there's an allocation for a 3rd section here, even though we have only 2 sections. But this template allows you to fill projects for up to 3 different products or services. And what happens is that you put in what your monthly sales volume is, what you anticipate. Essentially, like we said, let's say you're running a business that you collect plastic, you collect waste plastic that would have gone into landfills, and then you take them to your factory and you recycle them into new productions, new recycled products. So when you do that, you can project your estimation for your business is that if I'm running this type of business on a monthly basis, I should be able to sell 10 products, and I should be able to sell them at the base price of 500 naira. Let me just make this 5,000 naira. Each of them at base price of 5,000 naira. So you put in that estimation here. The next product line, which was plastic waste collection from corporates, we're estimating that you'll be able to go, again, this is the business idea concepts that I'm using to fill this financial model templates, that you collect plastic and you recycle it, but you also have another business line where you pay, you ask corporates to pay you, and you will come and collect all their plastic waste and you recycle it. And all that work to come and collect their plastic waste, you charge them a fee for collection. So for this service line, that second service line, which is plastic collection services from corporates, you're estimating you'll be able to collect plastic 500 times in a month. It can be from the same corporate organization. Maybe they generate a lot of waste and they tell you to come and collect like maybe 2 times each day. Or you can have up to 5 corporate organizations and they're collecting their waste maybe once a day, twice a day. But I've just assumed 500. Maybe it is true to life, maybe it's not. You collect 500 times a month, and each time you collect, they pay you 1,000 naira. So that is the estimate that is driving this number I filled in here. So in addition to putting in what your base monthly sales volume is and your base service price is, this template also asks you to account for seasonality. What seasonality means from a business perspective is that you don't make the same volume of sales every month in a year or every period in a year. For instance, if you are a business that is your volume, your sales is driven by seasonality, you will need to account for monthly spikes or slumps. Let me give the example of a business. Let's say you collect plastic bottles around and you recycle and you make umbrellas and you sell the umbrellas. The way how we understand it is that sometimes in a year, there's particular times in a year where sales of umbrella is higher than the other times. Like the rainy seasons, in the rainy seasons, you can sell lots of umbrellas. But in the dry season, you might not sell lots of umbrellas. So let's assume that this recycled plastic product is an umbrella. And in January, February, which tend to be the dry season, you might not be able to sell up to 10 pieces. So you say you account for the slump in sales and say, I might just sell 70% of that 10. I might just sell 70% of that 10. And then by time March comes around, where it is full rainy season, you might be able to sell 3 times your normal sales volume. And you say, I should be able to sell 30 pieces instead of 10 pieces. So I would account for 300%. I would say my March seasonality will be 300%. April will be 300%. May will be 300% because these are all the raining months. And by the time the dry months come around, I will account for the slump and say maybe it will just be 50% I will sell. So I've done that. So that is essentially what seasonality means. It does not apply to every business. Some businesses, they are not affected by seasonality. So you can just leave it 100% if you run a business like that. And then you move on to the next section. So for the revenue section, just going over what you do in the revenue section, you fill your base monthly sales volume, base product price, and then you account for month-on-month seasonality in your business for all the different business lines that you've selected. So before I go on to the 7th section, I will pause here for translations. Foko, please, over to you to translate.
OK, thank you. Donc, la prochaine section, c'est la section sur les salaires. Donc, il est question ici d'analyser quels sont les personnels que vous allez utiliser et ne remplissez que les rubriques où vous avez effectivement du personnel. Ça peut être le personnel de développement de l'activité, ça peut être le personnel des ventes, ça peut être le personnel de marketing. Donc, à vous d'indiquer leur nombre et le montant de leur salaire. Et rappelez-vous que tout ce qui est en fond noir, c'est rempli automatiquement et tout ce qui est grisé, c'est les zones où vous devez mettre les informations. Next, please. Donc, ne remplissez que ce qui concerne votre activité. Next section, please. OK. La prochaine section, c'est la section sur les coûts d'exploitation. Ici, il est question d'indiquer quelles sont vos charges variables. Ça peut être la matière première, ça peut être la main-d'œuvre directe, ça peut être les petits frais et les fournitures de l'entreprise, ça peut être le transport. Et d'indiquer aussi quels sont vos coûts fixes. Ça peut être le salaire et les rémunérations, le loyer, les utilitaires, les frais de marketing et de publicité, les frais administratifs, la maintenance, l'assurance, le transport, les licences. Donc, pour toutes ces rubriques-là, vous devez indiquer quels sont les montants de base. Et en fonction des taux de croissance que vous avez indiqués, vous verrez que le reste va se remplir automatiquement en fonction de ce que vous avez indiqué comme taux de croissance. Next, please. Dans la section revenus, vous devez donc indiquer, ici on a pris l'exemple d'une entreprise qui fait dans la collecte des déchets plastiques auprès des entreprises. Donc vous devez indiquer quel est le volume de vente. Ici on a mis par exemple 10 et quel est le prix de vente. On a mis par exemple 5 000. Et quand vous le remplissez, vous voyez que les courbes qui sont en bas et les analyses se mettent à jour automatiquement. Et il est aussi question pour vous d'analyser quelle est la saisonnalité de vos produits. C'est-à-dire, est-ce qu'il y a des moments de l'année où les produits se vendent plus et les moments de l'année où les produits se vendent moins? Il y a donc un espace pour cela où vous devez indiquer les paramètres de saisonnalité de votre activité. Et quand vous le remplissez, quand vous les indiquez, tout se remplit automatiquement. Donc, OK. Thank you. Over to you.
Thank you, Foko. So moving on to the 7th section, which is working capital. And before we go in there, let me read the description. Working capital is an estimate of the amount of cash your business requires to fund day-to-day operations. Availability of working capital depends on how fast you can collect cash from your customers after providing your business, providing goods and services to them. Provide realistic estimate based on peculiarities of your local economy and business industry for this below. So you will see what you need to fill in working capital is just 3 sections: your receivable days, your payable days, and your inventory days. So let me go back to the example of the business, my business that I am modeling out here in this financial template. I collect plastic, I recycle it, I create umbrellas, and I sell. And then I also collect plastic, do waste collection for corporates. Receivable days is essentially average number of days that customer takes to pay for your business or service rendered. Let's say, for instance, every time I sell my umbrella, I make sure my customers pay cash. So I collect immediately. So I don't have any delays in collecting for the umbrellas I'm selling. However, with the corporates, every time I go to collect their waste, they don't pay me immediately, but they pay me at the end of the month when they do all their vendor payments. So if I start to collect on the first day of the month, I will keep on working until the 28th day, which is when they will pay me. And if you know, for that example, I would say that my average receivable days is usually averaged out. I would say, for instance, because not all of them, because some of the money, like if I collect the waste on 25th and they pay me on 28th, that was 3 days that it took to collect. So if I want to do an average of 1st to 28th, collect service on 1st, collection on 28th, and then service on 25th, collection on 28th, I can just say that on average, my receivable days is, this is not the correct average, but I can just estimate that my receivable days is 20 days. But essentially what you would do is create an average of how long it takes for your customers to pay you after rendering your service. That would be your receivable days. For payable days is the number of days you take to pay your suppliers. So let's say, for instance, we are running that business, we collect plastics, we recycle them, we reshape them, we repurpose them, and we create umbrellas. To create an umbrella, I need suppliers to sell me the metal rods. When you hold an umbrella, there's a supporting rod. So I buy rods and I use those rods in the creation of my umbrellas. So I have someone I buy the rods from, and that seller I buy the rods from, when I collect the goods from them, I tell them I will pay them in 15 days. I don't pay them immediately because I'm not collecting money immediately. So me and that supplier, we have an agreement that after 15 days of collecting the goods, I will pay them. So my payable days will be 15 days. So these numbers, 20 days, 15 days, is based on your agreements with your customers and your agreement with your supplier. It is not usually, I'm making estimates and making assumptions, but for you, you are going to put in your receivable days and payable days based on the agreement you have with your customer for receivable days and the agreement you have with your suppliers for your payable days. Inventory days is average number of days you require to sell one batch of inventory. Let's assume I'm making those umbrellas, and when I bring a batch of plastic in, when I bring in my batch of plastic, at the end of the production process, I create a batch of 1,000 umbrellas, and I now go into the community. Well, because let me not make it 1,000 umbrellas, because I said my monthly sales is 10 umbrellas. Let's say I create a batch of 50 umbrellas. I'm selling 50 umbrellas at the rate of 10 per month. That means it's going to take me, 5 months to sell a whole batch, which 5 months is a lot. And ideally, for most businesses, you want to be able to sell off faster. But let me just assume that I use 5 months to sell my batch of umbrellas, and 5 months in days, that is 150 days. So that is how I compute my receivable days, payable days, and inventory days. So that is working capital for the working capital section. Next section is startup financing. To start your business, you need cash. Estimate what proportion of your startup costs will be sourced from the various financing sources provided below. Ensure all percentages add up to 100% to adequately account for financing needs. So what startup financing means is that we are all here, you've come to TEF as part of your incubation to start your business. For a good number of you, you already have some kind of money already in some other places that you have set aside or have been committed to you to start this business. And the money that is coming from the TEF Foundation is just adding on to that. So out of the total money that you need to start the business, and let's assume you have done your calculation and you know that you need 30 million to start your business. Of course, in this template, you don't need to put 30 million because this template will already compute what your total startup cost is based on all the information you provided here for startup cost. It would compute it for you. But so that I can move fast on this particular section, let me just assume that the total amount you need to start this recycled plastic business is 30 million. And let's just assume that out of that 30 million, I have 5 million of my personal money that has been committed to me. People have given it to me, and I know that this is the money I have available to start the business. So that means my owner's capital is 17%. I just computed it here, 5 million divided by, I have a feeling, let me just be sure that this is 30 million. I'm looking at here, yeah. Okay, this is 30 million. And this is 5 million. So it's 17%. Then out of the 30 million, I know how much is coming from the Tony Emu Foundation. And let me just assume that that is 10% of my total that I need to start up. Then that clearly means I'm going to need equity and I might need equity, I might need debt. But essentially, what you do here is you estimate the spread across equity and debt that you're going to need to make up this 30%. You can see that 17 plus 10 plus what I have here has not gotten us to 100. And that's why it has brought up this error message, financial proportions incorrectly entered. So I'm now going to put in numbers up until the time that it corrects it. So it's at 75%. To get to 100%, I need to allocate 25% somewhere. And let me just make this 55%. And you now see it's 100% and it's all fully allocated. So what you do here is just spread out your startup costs across the different sections, at the different financing methods, grants, equity, debt, and your own money. Just spread it out so that we are able to allocate your source of capital in this financial statement. And then the last two sections, equity financing, you might need additional, typically you might not need to fill this section, but if you know that based on this, what you filled here as the equity you need, he has computed the equity injection. Like if you notice, if I change this number will change. Let me move it back to, this will be 5. So if you know that this number will not be enough and you're going to need to look for equity by year 2, year 3, year 4, you can come in and put in how much you are going to need, get as additional equity. So let's assume that in year 3, I'm going to go and look for 10 million naira more to add to my business. I can put it in here. So here you can account for additional sources of financing by year, additional injections, equity injections that you expect to come into your business. And then finally, debt financing, which might not apply for everyone. You can just put in the different debts that you would, it allows you to account for 3 different debt facilities. And then you say, okay, I'm going to, and it will allow you to indicate which year you are borrowing that loan. Like you might need the loan in year 1, or you might need it in a year ahead, year 7. You put in the loan that the year you borrow your loan. You put in this amount to the borrowed comes from this allocation here. So if you notice, if you change this allocation, that number will change. So let me change it back. So again, these sections might not be required based on your own type of business. It's not everybody that is going to go out to look for additional debt or additional equity. But if you know you're going to go out to look for additional money in the form of debt, you put in the facility here, put in the amount to be borrowed. For year 1, it fixes the amount to be borrowed, but for other years, you can then put in how much additional money you want to go and borrow. Let's say you plan to borrow additional, get debt of 5 million in year 3. Let me change this here. And your repayment period to be for 5 years. That means it will end in this year. So once you have put all of that in, you can then move to the next sections, and you will notice that your financial statements have been populated. You have your income statement populated, your balance sheet populated, and your cash flow statement populated. So I'm done with this template, but I would pause here so that Foco can translate before I move back to the Q&A, the questions that came from the last section, and I will start to answer those questions. Okay, Foco, please help us translate the from section G, working capital, startup, and equity, and then debt.
Exactement.
Thank you.
OK, pour ce qui concerne la section sur le fonds de roulement, please, working capital, sur le fonds de roulement, il est question pour vous ici d'indiquer les différents délais d'opération de votre entreprise. Ça peut être le délai de paiement de vos clients, ça peut être le délai de paiement de vos fournisseurs. Donc, quand il dit paiement des clients, c'est-à-dire le paiement que vous recevez de vos clients, les créances, le délai que vous accordez, ça, ce sont les délais moyens. Ça peut être le délai que vous accordez à vos fournisseurs pour les payer, ou bien la durée que les stocks mettent au sein de votre entreprise. Et comme on a dit, tout ça, ce sont les valeurs moyennes. Donc, vous devez les remplir. Ici, par exemple, on a mis comme délai des créances. Donc, délai de paiement client, 20 jours. Délai de paiement des fournisseurs, 15 jours. Délai de paiement, de durée des inventaires dans les stocks, 150 jours. Donc, ça dépend de votre activité. Vous devez les analyser. OK, pour ce qui est de financement de démarrage, ici, vous devez indiquer quelle est la structure de financement de votre projet dès le départ. Est-ce que c'est votre épargne personnelle? Ici, on a par exemple mis 17%. Est-ce que c'est la subvention? Ici, on a par exemple mis 5%. Est-ce que c'est l'equity, c'est-à-dire les montants que vous allez faire en termes d'ouverture de capital des autres personnes qui ont contribué à votre capital? Ici, on a mis 60%. Est-ce que ça va être des dettes? Ici, on a pris l'exemple de 18%. La somme fait 100%. Donc, vous devez indiquer quelles sont ces valeurs, les valeurs qui correspondent à votre entreprise. Please go down, equity financing. Donc, pour ce qui concerne le financement du capital, c'est-à-dire la façon dont vous allez financer, ça peut donc être, comme on a dit, le financement par l'ouverture de capital. Ça peut être, et à ce moment-là, vous devez indiquer quel est le montant que vous injectez au départ, quel est le solde de départ et surtout quel est le solde de fin. C'est des valeurs, quand vous remplissez, ça se répartit automatiquement sur toutes les lignes, telles que vous êtes en train de les voir. Maintenant, pour ce qui est des dettes, on a donné la possibilité d'avoir 3 dettes. Pour chacune des dettes, vous devez indiquer l'année, vous devez indiquer le montant, vous devez indiquer la période de paiement, dans la durée de la dette, on va dire, et l'année où la dette finit. Quand vous les remplissez, ça part automatiquement se reverser dans les tableaux. Donc, vous le faites pour la dette 1, pour la dette 2 et pour la dette 3. Si une rubrique ne vous concerne pas, veuillez ne pas la remplir. Next, please. Donc, il me semble que c'est fini. I have done with. Donc, quand vous les remplissez automatiquement, vous avez le tableau d'amortissement des dettes. Donc, tous les tableaux de dettes qui apparaissent. Next, please.
Okay, this is the end of the section.
OK, donc nous allons maintenant passer à la session des questions-réponses.
Okay, thank you very much, Foko. So what I'm going to do here is go back to the questions that we asked, and I've even noticed some questions from the YouTube chat Q&A, and if you have any additional questions, you can drop it there in the live chat. I've seen 3 questions which I will take on. So the first question from the last session was, my question is under growth rates. Please, I will need more explanation on cost growth rate. So I have spoken through the explanation on cost growth rate in this section. Won't spend too much time on it, but just understand that what your cost growth rate implies is based on the understanding that the cost that you're using to run your business, the salaries you are paying, the goods that you're buying, they are going to change year on year. Some of them might grow, some of them might reduce, but as business owners, you are supposed to account for a likelihood that they will all increase and then account for how your costs will grow. So you can put a baseline number like 2% or 4% flat and it will still be fine. But if you know you are in a country where there is high inflation, you want to make sure that the growth rate matches the inflation rate so that you are not underestimating. Because what this projections are is they're supposed to try and paint a realistic picture of the cost that you would need to incur and the revenue that you will get in your business for the first 5 years. So you use that as your cost growth rates. Second question is, how many years of financial projection should we drop for a startup year to make traction? So it is the same number of years of financial projection that everybody in this BeGreen program is expected to project. And I believe that is 5 years. So you project for 5 years. I see a lot of questions around the fact that, okay, I haven't started making money in the business and my business is still in idea stage. How can I build projections? How can I create projections? Yes, even though your business is in idea stage, you're still expected to project because the whole idea of this set of trainings, what the Tony Emu Foundation is organizing is to train you to learn how to plan and train you to build in the habit of business planning. So the fact that you are not there now and you're still in idea stage doesn't mean that you are always going to be in this stage forever. It means that you have to start learning how to think about what your business is going to need next year, 2 years from now, 3 years from now. And this financial template allows you to build your estimations based on what you are seeing in your environment and your market. Because what is very critical for your business is projecting your financial flows so that you do not run out of money. And you know that cash is king in every business. When you run out of money, your business is at risk of failing. So that is why financial projections are important. It allows you to see ahead, plan ahead, so that you can make provisions for what you will need in the future. Like for many of you, by the time you fill this financial projection templates, and then you go to the income statement section, you will notice that you're running at a loss. What that is telling you is that your costs are going to grow very much in the coming years, and you need either your revenue to grow as fast as possible to match it, or you need to seek for additional, just ensure that you have sufficient cash to keep on running the business. But the bottom line is that it gives you a picture of what your 2 years time, 3 years time will look like, so that you can make arrangements to plan ahead, either to think of how you are going to make more revenue in your business, or how you are going to get additional financing, whether equity or debt financing. So this is a planning tool. This is a forecasting tool. And it helps you to, at this stage, wherever you are, whether idea stage, whether pilot stage, whether you've entered the market, it helps you to start thinking of what your next year, your 2 years time, your 5 years time will look like, so that you're financially ready as a business for the years to come. The third question, I need more information on income statement. Okay, I've also touched on the income statement as well. I explained it in the last session. Because of time, didn't have time to go into it in this session, but you don't need to create the profit and loss statement. All you need to do is put in the assumptions in the assumptions section on your revenue and your costs, and the profit and loss statement will automatically populate for you. What is the meaning of cash flow? Cash flow is essentially the movement of cash in your business, which can either be money moving out or money moving in. So you can have cash inflow and cash outflow. And it's essentially a picture of your cash flow statement is a picture of all the money coming in and all the money going out. Then question 5, how can a startup best make balance sheets, knowing well that the business is just a startup with not much on ground? I've kind of addressed this as well. Number 1, you don't need to build your balance sheet yourself. All you need to do is, in your assumption statement, fill the elements that will go into your balance sheet. Your balance sheet is showing your assets, your liabilities, and your equity. In the assumption statement, you will fill your assets. Which cars do you need to buy? Which vehicle do you need to buy? Which land do you need to, which buildings do you need to set up? Which equipment do you need to buy? Those are all your fixed assets. So in the assumption sheet, you see the sections that you can fill your assets. You see the sections where you can account for your liabilities, which is the money that you're owing other people, whether loans or money that you're owing vendors based on your payables and your debt schedule. And the equity section is feeding from what you put in as your owner's capital and all the equity financing sources. So you don't need to worry yourself around how to create your balance sheet. All you need to do is fill the assumption, and then your balance sheet will be automatically populated in the relevant sheets. When an investor asks, what's the valuation of your company? How do I calculate that? So valuation is a very specific type of calculation that is usually not accounted for in financial projections. There are different ways to value your business. There are different techniques you use. So you will typically enlist the services of a financial advisor that will help you look at different parts of your business, your management team, your revenue, your market, and then it will build an estimate of, based on all these different factors, this is what the value of your company would be. But it's a bit technical, so you're usually recommended to get a financial advisor to help with this. Number 7, my business is a startup. Can some of the costs, for example, skilled management personnel, be projected costs since the operations are still small? Yes, they can be, very well. In fact, it's not recommended that you hire too many people when you're starting your business. You hire just the people you need, and then as your revenue grows and you have more inflow to be able to pay more salaries, you can then account for management personnel to be hired in year 2 or year 3. Remember that I showed you in the template how you can change the number that you want. Okay, 0 managers in year 1, 1 manager in year 2, 2 managers in year 3, and on and on. So yes, you can push out the cost for senior management personnel to future years. Is cash flow the same as money received from your customers? This can be tricky because your cash inflow. So when you talk about money received from your customers, when you have customers that say, I'm not paying you cash now, I will pay you credits, it's still money received from them. It's still accounted for as revenue, but it is not accounted for as inflow of cash unless they are paying you on the spot. So sometimes it can be the same thing, sometimes it's not the same thing. And cash flow that I believe you're referring to is cash inflow. Then the 9, should an executive summary contain solutions to the primary problem? I don't know that there's an executive summary section of this financial template. So I think this applies to the business plan. So this would be relevant to the business plan section. I will take, okay, Foko, are you able to translate or do you want me to go on ahead?
Yes, I can translate.
Okay, let me pause here. Thank you very much.
Okay, let me go on then. Okay. Donc, pour les questions-réponses, il y a un certain nombre de questions que vous avez posées depuis la première fois, la dernière fois, et nous allons y apporter quelques réponses. La question 1, c'est quelqu'un qui a demandé à savoir ce que c'est que le taux de croissance et surtout comment est-ce qu'on peut faire pour connaître le taux de croissance des coûts. Donc, ici, on a répondu que le taux de croissance, c'est des taux qui sont connus dans une économie. Donc, il y a des études économiques qui permettent de les donner et généralement, vous avez cette information. Et on se sert aussi souvent du taux d'inflation. Le but ici, c'est de se rendre compte que le taux de croissance de vos coûts ne doit pas être plus élevé que le taux de croissance de vos revenus, auquel cas vous aurez automatiquement un déficit. Donc, il y a un jeu à ce niveau-là. La deuxième question, c'est comment est-ce que pour une start-up, donc pour une entreprise qui démarre, comment est-ce que le nombre d'années pour lequel elle doit faire ses analyses financières, ses projections financières? Donc, la réponse qu'on a apportée, c'est juste un éclaircissement général sur le pourquoi de l'analyse financière. Donc, il est question ici pour vous de savoir que lorsque vous faites une planification financière, ça vous permet d'anticiper sur ce qui va se passer dans le futur. C'est pour ça qu'on vous a dit de remplir uniquement le tableau, l'onglet des hypothèses. Et quand vous remplissez l'onglet des hypothèses, votre bilan, votre compte d'exploitation, donc le compte de perte de profit, et votre cash flow, le tableau de trésorerie se mettent à jour automatiquement. Alors, quand vous mettez vos hypothèses, en allant regarder dans les résultats, vous pouvez voir qu'il y a des déficits ou bien des valeurs anormales, des comportements anormaux qui montrent que votre entreprise ne doit pas survivre. C'est à ce moment-là que vous revenez modifier les valeurs que vous avez mis en hypothèse. OK. Question 3. Est-ce que bon, quelqu'un voulait savoir quels sont, qu'en est-il du tableau de compte de perte et profit ou de tableau des résultats? Il voulait en savoir plus. Donc, vous a dit, c'est un tableau qui permet d'opposer les produits et les charges. Les charges, c'est tous vos coûts opérationnels. Les produits, ce sont les revenus de votre entreprise. Question 4. Que veut dire cash flow? Donc, le cash flow ici, c'est la somme des entrées d'argent moins la somme des sorties d'argent. Et c'est ça qui vous permet de pouvoir autofinancer votre entreprise. Bon, il y a bien sûr des formules comptables ou mathématiques pour les calculer. Comme par exemple, on vous dira que le cash flow qui signifie capacité d'autofinancement aussi, que le cash flow, c'est le bénéfice plus les amortissements. Bon, ça, on vous épargne de ces détails parce que tout a été déjà programmé dans Excel. Toujours est-il que le cash flow, c'est l'argent, la capacité d'autofinancement. C'est au niveau de trésorerie générée par votre activité sur une période donnée. La question 5. Donc, how can a startup best make balance sheet knowing that it is just... OK, donc comment est-ce qu'une entreprise en démarrage peut avoir un bon bilan en sachant que ce n'est qu'une entreprise et qu'il y a encore, ce n'est que des planifications et qu'il n'y a encore rien sur le terrain? On a déjà un peu répondu à cette question parce qu'on vous a dit que dans l'onglet des hypothèses, quand vous mettez tous les indicateurs tous les 10 sessions qu'on vous a indiquées, vous devez aller vérifier dans le tableau de bilan pour voir si votre bilan est équilibré, si les valeurs ne sont pas négatives. Parce que si les valeurs sont négatives, bizarrement, ça voudrait dire que votre entreprise n'est pas viable. Et à ce moment-là, vous devez revenir retoucher vos hypothèses. Et le but, justement, à la fondation, c'est de vous donner ces outils qui permettent de faire la planification financière. Et la planification financière, c'est justement un prévisionnel qui vous permet d'anticiper sur le comportement de votre entreprise. Pour la question 6, On dit, lorsque les investisseurs parlent de la valorisation d'une entreprise, comment est-ce qu'on fait pour valoriser une entreprise? Donc, vous devez savoir que lorsqu'on parle de valorisation d'entreprise, ça sort un peu du cadre de tout ce qu'on a fait dans le tableau Excel. Les prévisions financières ne gèrent pas la valorisation. Par contre, on vous a recommandé de prendre des experts pour ça. Il y a des experts qui font uniquement dans la valeur de votre entreprise. Sinon, la valeur de votre entreprise dépend aussi bien évidemment des projections financières. Ça veut dire que quand vous faites vos projections financières, ça aide à avoir par exemple ce qu'on appelle la vente, la valeur actuelle nette, dont les revenus futurs sont actualisés et à partir de ces revenus futurs, on donne une valeur à votre entreprise qui tient compte de ces revenus futurs-là, donc qui tient compte du tableau Excel. Mais on vous l'a dit, ce sont les calculs experts, vous devez voir des constants attitrés pour pouvoir le faire. L'autre dit, mon business, my business is a startup, some of the costs, for example, skill management, personnel, and projected costs are still small. OK, donc ici, c'est une question, quelqu'un qui dit qu'il a des coûts d'exploitation et de gestion de personnel qu'il projette et comment est-ce qu'il fait pour les évaluer si c'est petit. Bon, on vous a dit vous devez recruter le personnel en fonction de vos activités. Ce n'est pas sur toutes les rubriques que vous devez recruter le personnel. Et lorsqu'on dit, et on vous a aussi indiqué comment vous devez mettre le nombre de personnes à recruter année par année. Vous devez faire qu'il y ait une équivalence et une correspondance entre le nombre de personnes qui recrutent et le niveau de croissance globale de votre activité pour éviter un décalage ou un déphasage qui va rendre votre entreprise non viable. Cash flow the same as the money received from. Est-ce que l'argent qu'on reçoit des clients? Donc, ici, on vous a dit que le cash flow, qui est la trésorerie ou la capacité de financement, c'est une valeur qu'on obtient généralement après une période. Et cette valeur peut tenir compte non seulement de l'argent que vous obtenez des clients, mais ça peut aussi être des revenus ou de l'argent qui est venu de la vente d'une immobilisation. Ça, on vous l'a dit la dernière fois. Ou bien dans le tableau, il y a un endroit où c'est indiqué. Est-ce que vous avez des rentrées d'argent qui viennent de la vente peut-être d'une voiture, ou bien d'un immeuble, ou des chaises, ou des équipements? Voilà aussi des sources de revenus. Et ça influence sur votre trésorerie. Donc, il est question pour vous de veiller à ça. Et on vous a aussi dit que les clients peuvent acheter, mais ne pas payer cash. Ils peuvent payer à crédit. Et lorsqu'on vous donne un crédit, il y a un délai. Et vous voyez que la période de calcul de cash flow est bien plus supérieure que les délais que vous donnez à vos clients. Donc, il y a vraiment des calculs à faire pour obtenir la cash flow. Le cash flow et les recettes clients, ce n'est pas la même chose. Et les encaissements clients, ce n'est pas la même chose. Dernière question, est-ce que l'executive summary doit apparaître? Bref, la réponse, quelqu'un parle de l'executive summary. Pour ce qui est des calculs financiers, il n'y a pas d'executive summary. Mais par contre, l'executive summary est une partie de votre business plan, de la partie narrative de votre business plan. Et dans l'executive summary, donc, il veut dire dans le résumé exécutif, vous devez prendre certains éléments clés pour les mettre. Vous prenez certains éléments clés dans votre tableau de planification financière pour aller les mettre dans votre résumé exécutif. OK, on va voir s'il y a d'autres questions. Over to you, Muyumi.
Thank you very much, Boko. And then I'll just take a few questions from the chat window. So the first thing is Ebu, Oluwa, and Shonibare. You've dropped your question like 10 times. Please allow other people to drop their questions. Your question is in relation to the financial plan section of the Microsoft Word. You don't need to fill the financial model in there. If you want to, you can fill it, but it is not compulsory. You only need to generate your financial models in the Excel template. You can choose to pull out some of the relevant sections that apply to this model, but this is the section that will be accounted for financial projections, the Excel. is the section that will be accounted for your financial projections. I have a question from Emmanuel Lekishon. He says sometimes the income statement is not reflected correctly from what we feed from the assumption sheets. What can be done, especially when I have to change estimation severally to make them realistic? I think somehow you have answered the question. So when you put in all your assumptions and then you go to your income statement and you see you're running, it's like your business is running in loss and everything is looking so low, everything is showing red. It means that what it's telling you is that some of your assumptions, you need to go and look at them again. For instance, let me quickly flip over to the Excel sheet here. It's going to take me a while. And I want to talk about what that might look like. For instance, we're back on the Excel sheet. And then when we come over here, we can see in the income statements that I modeled for this business I'm running through, year 1 and year 2, the business is running in loss. You can see is red, and these brackets mean that it's negative. So the net loss is minus 95 million in year 1, minus 221 million in 2000, sorry, in year 1, and 221 in year 2. So this is showing that the business will be running at a loss for the first 2 years. If as an entrepreneur, you don't like this outcome and you want your business to attain profitability quicker, that means that you need to go and look at your assumptions. Maybe you see why the business is running at a loss in the first 2 years, because the total revenue is 13 million in year 1, 20 million in year 2. Meanwhile, the total costs, which is in this line over here, okay, this has computed the operating profit. So let me show you something, for instance, that is making the business run at a loss. You're generating revenue of 20 million in year 2, but your total salaries is 229 million. So that is showing you that your salaries are too high. Maybe you've hired too many people between year 1 and year 2. So what that's telling you is that you need to go back and adjust your assumptions. So you're either going to reduce the number of people that you're employing between year 1 and year 2, or you will think of how you're going to, your revenue will grow faster, like I've reduced the number of people. So instead of 2 to 5, is 2 and 2. And by the time we go back to the income statement, you can see at least it's looking better. And then, or you can also go back and improve your revenue growth rate. But as you're improving your revenue growth rate, it's not just by typing in the numbers. You also know that as a business owner, you're going to have to work harder so that you can grow your revenue fast enough so that you're not running at a loss for the first 2 years. So you can see the numbers have improved, and then you might need to tweak it 1 or 2 times. But essentially, when you notice your income statement is showing you a negative position, it's just telling you that your assumptions is a function of the assumptions. Your costs are either too high or your revenue is too low. So you go back in there and you adjust it. And as you're adjusting it, you're also making a mental note that, okay, if I don't want to run at a loss in real life, I need to put in more effort in growing my revenue and keeping my costs stable for my first years. Then another question from Usman Kha. He says, what about delivery services where you can't estimate the good, but it's a transaction-based system? I believe that the second example I gave here is an example of transactional-based system. So we understand that not all businesses are selling goods like recycled umbrellas. Some of your businesses are like waste collection services, businesses where you're offering services. Even with that, you should be able to count the number of times you offer that service in a month and estimate for how many times you would need to offer that service month on month, estimate how much you would charge each time you're offering that service. And if you do that, you will still be able to fill these sections. If you are a purely service-based business, you might not need startup of like section C. You might not need all of this. So all of this might be 0 for you. And something else that might also be reduced for you is your direct costs. So if you're a service-based system, all you need to do is just make 0 all the costs that don't apply to you and still put in the costs that apply to you. So it's that straightforward. You don't need to change things around too much. But what you need to do is to be able to estimate for the service you're providing. How many times will I be providing that service per month, per year? and how much will I charge each time I'm providing that service. That will give you your revenue computation. Then another question is from Musambo Musambo. He says, why are we doing this? Are we training to be analysts, or are we assuming that we will be running companies single-handedly? Aren't we encouraged to hire? So yes, this kind of estimation, all this financial modeling is usually done by on a regular ongoing basis. It tends to be done by the finance team in your organization. However, because you are building financial projections, and one of the requirements for the program you're in is to generate financial projections, you need to go to this process, and it's always helpful. I would like you not to see it as something that is too technical or something that you want other people to do, but I would like you to get into this work, even as technical as it might look, because it's a planning tool, is a planning process. In fact, by filling these templates and by looking at by the time you fill your assumptions, you see what your income statement is looking like, your balance sheet is looking like, your cash flow is looking like, it is already telling you what you need to change. So it is showing you a very live picture of what your first 5 years in a business will look like. And if you know you are not liking the outcomes, maybe you feel the loss is too much, your revenue is too low, your cost is too high, then you now know as a business what you need to do in real life to ensure that you keep your costs low and your revenue good enough to generate the profit that you want to see. So yes, even though financial modeling is typically a financial domain, but building financial projections is something that every business owner should be able to participate in and do for their enterprise. Another question notice. I have a question. When it comes to financial projections, how do you make the assumptions for an idea? For some of you that you say it's an idea, yes, it is an idea, but you cannot, the Tony Melu Foundation is not just going to finance ideas. You have to show that you're willing to turn that idea to a business. And how you show it is by building this kind of projections that, yes, it's an idea, but based on what I can see in the market, I know that I should be able to create this product, and it will cost me this much to make this product. When I make this product, I should be able to sell this number of items. I should be able to sell 10 units in 1 month, 20 units in the next month. So you should be able to project, even though it's an idea. You should be able to gather the information from the market based on what your customers, how the customers in your market are buying, how the market is asking for your good and service. You should be able to make projections of what your first few years in the business will look like from a financial perspective. And then the final one I will take is Kelechi Paul. As it concerns agriculture, will the inventory days be equated to period of maturity for the crop? So I think because this is waste management, I'm not sure how agriculture will apply, but inventory days is not crop maturity. Inventory days is always how fast do you sell. It's not how fast, because crop maturity is almost an indicator of what's the timeline between your product moving from raw material to good stage, even in a non-agricultural setting. But inventory is always about selling. Until you sell, you're not considering it as inventory days. Inventory days is making an example that I have 50 pieces of my products in inventory, even if it's crop. I have 50 items of produce. How fast does it take for me to sell it? So until it moves to customer, we don't count it as inventory days. So it is not crop maturity. At this point, I will pause and I will hand over to Chimeze or Foko to take it from here. Thank you very much.
Okay, thank you. Donc, je vais rapidement donner quelques orientations de ce qu'elle a expliqué. Donc, il y a des personnes qui ont posé des questions et qui ont ramené à réexpliquer un certain nombre de choses, des principes globaux de fonctionnement du tableau Excel. Donc, ici, il est question pour vous de faire des simulations financières. Ça veut dire que, en fonction des hypothèses, de ce que vous remplissez dans les hypothèses, on vous a dit l'onglet des résultats, bilan et du cash flow se remplit automatiquement. Et il y a même le résumé. Dans l'onglet de résumé, vous voyez bien qu'il y a des schémas, il y a des courbes. En fonction de la forme de ces courbes-là, on peut savoir si votre entreprise est viable ou pas. Et la tendance de ces courbes, quand ces tendances sont mauvaises, vous devez donc rentrer dans vos hypothèses pour modifier les valeurs. Ça peut être que votre prix de vente est très bas. Ça peut être que vous avez mis trop d'employés ou bien que vous avez mis moins d'employés. Donc, ce sont les indicateurs que vous devez analyser afin de pouvoir équilibrer vos comptes. Je me souviens que dans les années 2015-2016, quand les candidats envoyaient, quand les participants à la formation envoyaient ces tableaux-ci, tant que ce n'était pas, les courbes n'étaient pas bonnes, on ne validait pas. Parce que l'onglet résumé permet de voir quelles sont les tendances, est-ce que votre entreprise est viable ou pas. Donc, une autre question qui a été posée a permis d'indiquer que non, on ne veut pas faire de vous des experts financiers à travers cette table. Il y a quelqu'un qui a posé cette question. Il est juste une question pour vous de savoir remplir un certain nombre de choses, de comprendre les principes de fonctionnement de la planification financière. Et en temps normal, ces calculs sont faits par le département finance de votre entreprise. Ce n'est pas forcément le chef d'entreprise. La formation qu'on vous donne au sein de la Fondation Tony Melo, c'est une formation qui vous permet de pouvoir comprendre ce que c'est qu'un bilan, ce que c'est qu'un compte d'exploitation prévisionnelle, ce que c'est que les coûts de démarrage et tout ça. Mais on ne va pas faire de vous des experts en tant que tels. Donc, globalement, voilà un certain nombre de choses qui ont été expliquées. Je ne vais pas rentrer dans certains détails. Il y en a qui ont posé des questions sur les délais et sur la durée des stocks. Ça dépend de votre projet, ça dépend de votre entreprise. Il y a une question qui a été posée sur les services. On vous a dit, vous devez adapter le modèle à votre activité. Ce n'est pas toutes les entreprises qui ont des biens. Par exemple, si vous faites dans la collecte des déchets, il y en a qui collectent les déchets pour aller revendre, il y en a qui pour aller revendre, il y en a qui collectent les déchets pour aller recycler avant de vendre les produits, il y en a qui collectent uniquement. Et le fait de collecter pour aller déposer quelque part, l'entreprise où vous avez collecté ces déchets-là vous paye. Donc, ça veut dire qu'ici, votre entreprise vit à partir d'un service et non à partir d'un produit. Donc, voilà les différentes orientations qu'on a apportées aux réponses qui ont été posées. Over to you, Mouyoumi.
Okay, thanks a lot, Foucault, for your kind translation. Thanks again to you and Naomi, for your insightful presentation as well. I'm seeing a lot of comments on the chat box saying they can't log into the training. Please send us an email on our email handle, enquiries@tonyelumelo-foundation.org, and we will handle your issue on a case-by-case basis, and we'll let you know when your issue has been resolved. So please don't just complain here alone. Take action and send us an email, and we'll resolve any issues that you have. Thank you again very much. Foucault, please, can you quickly translate that for our French audience?
Give me just a recap of what you said, please.
So a lot of people are saying they can't log into the platform to take their training. So I said that they should send us an email on enquiries@tonyelumelo-foundation.org, and we will resolve their issues on a case-by-case basis. So they should not just complain here alone. They should take action and send us an email as well.
Ok, oui, donc on reporte que, on signale qu'il y a beaucoup de personnes qui se plaignent, qui n'arrivent pas à se connecter. On vous l'a dit, il y a une adresse email inquiry@tonyelumelo-foundation.org. Si vous avez des soucis, envoyez un email à cette adresse-là. On va vous gérer au cas par cas. Donc, ne restez pas seulement là dans les chatbox pour vous plaindre. Si vous avez un souci, envoyez un email. On va prendre soin particulièrement de votre cas. Voilà ce qu'on me demande de vous transmettre. Donc, ne vous plaignez pas inutilement. Thank you, Shimize.
Okay, thanks a lot, Foucault. Thank you again, Omombi, for this session. Thank you all you entrepreneurs for tuning in to join this insightful session as well. We'll see you soon. Have a great day. Bye bye.
Bye bye.